All right, the purpose of this video is to walk you through filing a 1040 tax form. Our focus here is the O'Sullivans. Example 1. Margaret and Brian O'Sullivan are married. They have one child named Carol. Margaret works for a sports cable station, and Brian is a cameraman. The O'Sullivans had a combined wages of $96,521. They also had interest of $812 from Seaford Bank and $877 from Buffalo Bank. They received stock dividends of $444 from GM and $1,200 from Apple. During the year, Margaret won $300 in a lottery. Find their total income from wages, bank interest, stock dividends, and the prize. All right, the first thing we're going to do is identify their filing status. Because they are married and going to be filing together, we're going to click the box that says Married Filing Jointly. We're then going to enter the names of both of our family members here that are filing. So we have Margaret O'Sullivan, and her social security number. We have her spouse, Brian O'Sullivan, his social security number, their address, and that's pretty much it for the first section. Now we're going to look at the standard deduction. And if we read through this, we can see that nobody can claim them as dependents. So we're going to move on. They themselves have a dependent, and her name is Carol O'Sullivan. And we'll put in her social security number as well. And she's their daughter. And then she is their only child. It does ask us here if she has more than 4 dependents, and that is not the case. So that's it at this point. Now, according to the problem, their combined wages are $96,521. So that's going to go on line 1. Now, because the O'Sullivans have dividends and interest that total over $1,500, they must use Schedule B to calculate the totals. So let's jump to that. So once again, we have our couple here, Margaret O'Sullivan and Brian O'Sullivan. And part 1 is all about interest. It says, list the name of the payer. If any interest from a seller finance mortgage and the buyer use the property as personal residence, see the instructions for interest first. So we're going to look over here and see what interest. They got interest from 2 locations. We got interest from the Seaford Bank all right, this one was in the amount of $812. Then we have interest from Buffalo Bank, and that one was in the amount of $877. On line 2, it said add the amounts on line 1. So we will take $812 and $877, and we see that the total is $1,689. Then on line 3, excludable interest on Series EE and US savings bonds, we're going to leave that blank. And then it says subtract 3 from 2. So since 3 is blank, we're just going to copy 2 down on line 4. So that gives us the same amount, $1,689. Now, right below line 4, it says note, if line 4 is over 1500, you must complete part 3, and it is, so just a note, we're going to have to complete part 3. Now, part 2 is dividends. So they also receive dividends from stocks that they own. We've got two payers. We have GM, and that is in the amount of $444. And then we have Apple stock, and that one was in the amount of $1,200. Add the amounts from these. So we've got our calculator again, and we've got $444 and $1,200 for a total of $1,644. Now, if line 6 is over 1500, you must complete part 3. So that's also true. So you must complete this part if you had over $1,500 in taxable interest or ordinary dividends, or had a foreign account or received a distribution form. So yes, this is the case. And at any time during 2020, did you have a financial interest in a signature or a signature authority over a financial account? Financial interest or signature authority over a financial account, such as a bank account, securities account, located in a foreign country? No. GM and Apple are both American countries. So no and no. So all of these are no's. And that is it for Schedule B. All right, so now we're going to jump back to our 1040. And we are going to move to line 2B, which is taxable interest. And according to our Schedule B, we got $1,689. And then 3B are our dividends. And according to our Schedule B, that was $1,644. So we're going to jump down to line 9 to get the total income. So we're going to be adding lines 1, 2B, and 3B. So using our calculator, we have $96,521 plus our interest at $1,689 plus our dividends at $1,644 for total income and wages of $99,854. So $99,854 will go on line 9. And actually, I just realized we missed one thing. So during that year, Margaret actually won $300 in a lottery. So we are going to have to report that as other income. So if you look on line 8, we see other income. So we are going to put that here, that $300. So we need to make sure we add that $300 on. So we now have a new total that is $300 higher than what we had before, right? So once again, $96,521 plus our interest at $1,689 plus our dividends at $1,644 plus the prize money. So the O'Sullivans had total income last year of $100,154. And that's example 1. All right, now we're going to move to the section on adjustments to income, line 10. We're going to be looking at Schedule 1. So at Schedule 1, we have any additional income. The Margaret and Brian O'Sullivan do not have that. But they do have additional expenses. And Margaret O'Sullivan teaches a night course at a local college and has $133 in educator expenses. We're going to put that here on line 10 on Schedule 1. Now, they also have $3,009 worth of moving expenses, and we are going to put that on this form as well, and this is something that they can deduct. So total of $3,900 in moving expenses. Now, if we combine these together, 133 and 3009, that is a total of $3,142. And that is the number we're going to transfer over here, $3,142. And we're going to put that number here as the total adjustments on 10C. Now on line 11, we're subtracting 10C from 9. So we're going to take the $100,154, their income, and subtract the $3,142. And we can see that their adjusted gross income is $97,012. All right, so now we're going to look at Schedule A to determine any additional deductions that the O'Sullivans might qualify for. So we're going to, once again, be filling out this form for Margaret and Brian O'Sullivan. And we would like to determine what medical and dental expenses are qualified here. So it says this: the O'Sullivans had medical insurance. The O'Sullivans had medical insurance and had $18,800 in medical expenses last year. Their medical insurance covered 80% of these expenses, so they actually only had to pay 20% of the medical bills. The IRS allows medical and dental expense deductions for the amount that exceed a certain percent of taxpayers' adjusted gross income, depending on their age, and this level is called the threshold. The question is, how much can they claim as a medical deduction? All right, so let's start by figuring out how much they actually paid this year. Now, their medical expenses were $18,800, but they only paid 20% of this. All right, so they actually paid $3,760. So we're going to put that here on 1. Now, we want to enter the amount from Form 1040, line 11. And that was their adjusted gross income, or $97,012. We want to multiply line 2 by 7.5%. So using our calculator, we'll take that $97,012 and multiply it by 7.5%. And we see that we have $7,275.90. So $7,275.90. I'm going to subtract line 3 from 1. If line 3 is more than 1, enter 0. So in this case, the O'Sullivans did not meet the threshold, so we're going to put in a 0 and they cannot deduct any of this from their taxes. All right, example 4. The O'Sullivans paid $5,451 in state income taxes and $6,533 in real estate taxes, and they paid $4,111 in mortgage interest. What is the total amount they paid in state income and real estate taxes? So we're going to be looking at this section here, taxes you paid. In 5A, we're going to be putting their local income tax, state tax, etc. So that was $5,451. In 5B, we're going to be putting real estate tax. So that was $6,533. 5C is state and local personal property taxes. We don't have that. And then D, we're going to be adding lines 5A and B together. So when we add those together, we have $5,451 plus $6,533, which is a total of $11,984. And on line E, it says, enter the smaller of line either 5D or 10,000. So 10,000 is the smaller. Other taxes, list the type and amount. We don't have any of those here. So we're going to add those together, and our total is $10,000. All right, so they also paid home interest in the amount of $4,111, and that is for a total of $4,111. 111 on line 10. All right, we'll continue in the next part of the video on gifts to charity.